Good morning, everyone. Thank you very much for joining me. This is the morning market review. It's Tuesday, the 26th of September. My name is Russell Shaw. I'm a senior market specialist at FXCM, and just want to draw your attention to my email address, rshaw@fxcm.com. If you'd like to reach out to me, that's the email address to use. Just going to go ahead, bring up our high-risk investment warning. I'll keep this on screen for a few moments. Good morning, Kim. Thank you very much for signing in this morning. Thank you everyone for joining this morning. And just going to keep this high risk investment warning on a few more moments. Hey Raj, good morning to you. Hello James. All right, and here is the market commentaries disclaimer. Hey Howard, thank you for signing in and good morning to you. All right, and our references, MarketScope 2.0 and TradingView.com. We'll go straight through to TradingView. I want to take a look at the real interest rate, and what we have here is effectively the green 5-day exponential moving average on top of the orange 10-day exponential moving average. So the trend following indicators are in bullish mode, and the RSI, of course, is above 50, but look what's happening here. It's gone overboard. Okay, it's gone overboard. Let's just fix. So you can see it's gone above 80. 80 is the overbought, and I'll just put in the area. You can see that so the idea behind an RSI is that the specific reason that we have put it in to the layout that we use is specifically to warn us when things are frothy, when the market is overbought or when the market is oversold. So the RSI tends to follow what's called the Pareto principle. 80% of its time, it's trading between 20 and 80. And 20% of its time, it's either below 20 or above 80. So it's doubtful that it stays overbought for a prolonged period. So we may probably see either sideways movement as the indicator normalizes, or we may see a pullback as the indicator normalizes, and that's going to have effects for the rest of the market. What we can do is bring up our market scope, and let's bring up the US dollar. And the US dollar tends to be positively correlated with the real interest rate. Now you can see it's moving along in zone 1 between the upper red and the upper blue, but take a look at its RSI. RSI has gone overbought as well. So I wouldn't be surprised to see some sort of normalization in the real rates, and I wouldn't be surprised to see some sort of normalization in the dollar. How would that work in terms of market action? Well, what would happen is market participants would tend to buy bonds. As they buy bonds, the price of bonds increases and the yields come down. And as the yields come down, we'll see the real rate come down as well. And let's just take a look at the US dollar on a weekly basis. And what we can do, let's take this out. That was from a week ago. what we can do is just keep an eye on the trend. So the trend is up. How do we know the trend is up? We determine trend using peak and trough analysis. So we've got a higher trough followed by a higher peak. But if there is going to be some sort of normalization in the real rates, we may be setting up for the next higher trough. So maybe something like this, some sort of corrective action. If we see some sort of corrective action on the dollar, that's going to ripple through to other instruments, isn't it? So let's just take a look at euro, see what's happening on the euro side of things. I'll just bring that up now. Bear with me a moment. What I'll do is I'll take out I'm waiting for the euro to come up here. Going back to trading view, I just want to show you guys by putting the US dollar underneath. And you can just see that it's tracking very similarly indeed. Okay, here is our euro, and taking a look at this on a weekly basis, you can see that the trend seemingly down. We've got the lower peak followed by the lower trough. We can see that the RSI is below 50, but where it gets interesting is when we go through to the daily chart, because remember the dollar is overbought. Okay, the dollar is overbought. The euro is tending towards that oversold area. So one would expect if the US dollar starts normalizing, then the euro begins normalizing just in a opposite direction, equal but opposite. When I say equal, not quite equal, but the idea is it should move in a mirror image to dollar. So then this all stems from the fact that the real rate is overbought. So I think, again, just to reiterate the causality here, the real interest rate normalizes, dollar normalizes, and the rest of the majors tend to follow. Okay, so what we could potentially see with euro would be perhaps a pullback towards that 30-week exponential moving average, and then the next leg. Okay, we're very low on the euro. It's 1.05, 75, and I have heard some market commentators say in 2024 the conversation of parity, okay, the parity starts coming back into the topic of conversation from next year. That would be interesting, okay, if we start moving back towards parity. So what does it mean we need to wait before we trade these currencies? Yeah, so look, the idea that we include an RSI, the whole idea of the RSI is effectively a warning system. Okay, so if you're going to go long while the dollar is overbought, I think you are entering a trade where the risk has now skewed. So you've got more risk associated with a trade. The whole idea behind trading is to control risk, is to manage risk. So my feeling is when we start having these overbought, oversold conditions, you've got this extra risk to manage. Well, you know, your trading plan needs to have some sort of idea of what to do when you're faced with an overbought, oversold condition. From my side, I'd want to see a normalization. Okay, remember what we're trying to do. We're trying to buy the dips in an uptrend. We want to sell the rallies in a downtrend. The fact that we've gone overbought, that suggests to me that there is probably going to be a dip coming in the near future. Okay, that for me is a better risk-adjusted entry. Okay, but again, your trading plan needs to have contingencies for that. From our side, the higher level of the RSI is an element for skewed risk against us. Let's take a look and see what's happening on cable. All right, so it looks very similar to the euro. We don't quite have the lower peak, lower trough. So we've got this one big long impulse move here. What's happening on the daily chart? And you can see that with the Bank of England effectively holding its interest rate, cable has been hit quite severely, and it's oversold. Again, RSI tends, not always, but tends to follow that Pareto principle. The fact that we are under 20 over here, to me, suggests there is a skew, okay? The skew is in that there is some sort of push. Okay, so I don't see how the RSI could stay under 20 for a considerable period of time. So some sort of normalization. I don't know if it's going to happen today. I don't know if it's going to happen tomorrow. But the idea is, okay, that this probably going to be some sort of normalization. If we go back, take a look how percentage-wise, how much time does the RSI spend between 20 and 80? The majority of its time. So once you go overboard, that's an exceptional, it's an abnormal level. And that's where we are. We're in an abnormal level right now. What if one's already in a trade? Well, just make sure that you're managing the risk. Make sure your stop loss is set appropriately. Again, stick to your trading plan. I can't give advice to close or open a trade. If I say close and it rallies another 50 pips, you'll say, well, Russ said that, and there could be some sort of complaint. I can't say that. But the idea is just manage your trade as per your trading plan. Okay. So we've taken a look at the US dollar. We've taken a look at euro. We've taken a look at cable. Let's take a look at gold. Also tends to move in an opposite direction to the dollar. Let's just bring that up. Okay, and if you take a look at gold, I actually find the gold chart quite a tough chart to read. We do have a lower peak. This is on the weekly. We do have a lower trough here, so theoretically there is a downtrend with the yellow metal. But if you had to take a trend line and draw it across, we've actually got this trend line has been breached. In other words, the downtrend momentum has slowed quite remarkably, to the point where it's not really moving so much as downwards as it is moving sideways. But there is a downwards bias there. That is not surprising. Why is it not surprising? It's not surprising because gold tends to move antithesis to the US dollar, and the US dollar has been very strong. So if the US dollar has been very strong, it's not surprising that gold has some sort of pressure. But remember, the dollar now is overbought. The question is, how long does it stay overbought for? At some stage, I would expect it to normalize. That's going to normalize either with the greenback moving sideways or with some sort of pullback. Well, if the dollar pulls back, we would expect some sort of bounce in gold. Okay, it's very interesting because it has slipped. Gold has slipped into zone 3. In other words, it's moved into its weaker area. If we get some sort of clue and it moves back into neutral, then perhaps the dollar is starting to make its move, starting to correct. What we can do is perhaps just put in a bit of a area here where a potential support is. So we've got support, and we can put in support over here as well. So this is kind of the support area underlying. I wouldn't be surprised to see some sort of bounce up here, given the fact that we have these support zones. Let's just reiterate: real rate overbought, gold overbought, and everything flows from there, assuming that that overbought condition normalizes. I want to just do 2 more charts. I want to do NASDAQ. Let's do 3: NASDAQ, DAX, and oil. Okay, so let's do NASDAQ first. Let's bring up NASDAQ. Now, typically, let's just go back. Here's our real rate. Here's the US dollar. I'm just going to change this US dollar to NASDAQ. Okay. And what tends to happen is as real rates move up, NASDAQ tends to have pressure on it. That's because of what we call the time value of money. We have looked at that previously, but if the overbought on the real rate normalizes, potentially some sort of support coming in for NASDAQ. And what you can see when it comes to NASDAQ, okay, is that there is support. Okay, we're coming to a support area. So perhaps the support area holds. Why would it potentially hold? Because we've got to see the interest rate pullback. We've got to see dollar pullback. And if interest rates come down, it should boost NASDAQ. Why should it boost NASDAQ? NASDAQ's a growth index, time value of money, which we've done previously, suggests that it moves antithetical to the interest rate. All right, so we haven't really looked at the timing mechanisms yet, and I don't think the timing mechanisms have come into play yet. The dollar's still very much overbought, cable very much oversold, euro tending towards that oversold area. But the idea here is, again, it follows the Pareto principle. Only a small amount of its time, when I say it, I'm talking the RSI, only a small amount of time does the RSI spend in abnormal levels. What are abnormal levels? Above 80, below 20. Let's take a look at DAX. And then what we will do is we'll take a look at oil. So DAX has broken down. Here is the lower peak, and here is the lower trough. Okay, so lower peak, lower trough. Again, it might find some support if interest rates start pulling back. But the fact of the matter is the DAX weekly chart is not looking healthy at all. This lower peak followed by the lower trough means that the weekly chart has gone into downtrend, and we can measure the downtrend momentum using a trend line. If we take a look at the daily chart, it's really pushing in zone 3, and the RSI is below 50. Okay, let's just take a look here at the hourly chart, and let's just clean this up. Let's get these ellipses out. What is quite dangerous here is that the RSI, beg your pardon, the stochastic, this is a stochastic. The stochastic is near that lower quintile, it's near that 20. As long as it stays near that 20, it does look as if DAX going to remain under pressure there. It's really not a good looking chart at all over here on a weekly basis. And then the final chart that we'll look at is just bring up oil. We'll take a look at UK oil. And the oil chart, yeah, oil has been pulling back for 2 weeks, but it's an uptrend. High trough, high peak. Potentially, this could be the next higher trough. So we've got to just keep an eye on that. We did say that the oil price was overbought. Okay, well, that overbought condition, this is exactly what we're talking about. The overbought condition has now normalized. So we potentially got a dip here. In the uptrend. So what we can do is we can go through to, let's just put a question mark here. What we can do is we can just take a look at the hourly chart here and just see if there are any potential triggers on the hourly. Right now, we are heading quite severely to the downside, but what I would do is I would see if the higher time frames influence the lower time frames. The higher time frame is in an uptrend. The daily chart, it has slipped from zone 1 to zone 2, but potentially some sort of dip in an uptrend action here. Then we can go down to the hourlies and see if there is any timing. At the moment, there's no timing to it. What are we talking about when we say timing? Well, we're looking specifically for the EMAs to cross to the upside. We're looking for stochastic to cross to the upside. And then we would want the stochastic to make its way through to the upper quintile. We don't have that yet, so it's a waiting game at the moment, but it's all about marrying the lower time frames with the upper time frames and seeing if we can get some sort of synchronization there. The markets are tough at the moment. We're moving, but we're moving whilst we're overbought on the yields. We're moving whilst we're overbought on the dollar. That to me makes it for a very uncomfortable situation, because now it's really, well, we've had a question, what happens if we're already in a trade? Well, you know, just manage that with your stops. What happens, how do we trade it? Well, in my view, you know, going long whilst you're already overbought, gee, you know, I'm not comfortable with that. Going short while it's oversold, I'm not comfortable with that. The whole idea behind the RSI that we've included is that it is a measurement of risk, so to speak. And when we go into these abnormal levels, the risk is heightened. Whole idea of trading is managing that risk. Why would you approach a trade that has heightened risk on? That to me seems very, very strange indeed. We shouldn't. Very complementary with real rates, yeah. And let's just watch what happens with those real rates, Raj. I don't think the real rates are going to change trend, but I think we might see some bond action, and that bond action may pull some of the yields back. It just seems that we're in a very frothy market at the moment, very frothy indeed. All right, are there any other questions? Any other questions, guys? All right. Thanks, James. Thanks, Raj. I want to wish you guys a great day ahead, a great evening ahead. We will talk again tomorrow morning. Tomorrow, we've got that extra webinar, the Crypto Minute as well. All right, guys. Speak to you tomorrow. Cheers.